Hello everyone, this is Benjamin Bishop from Stock Hours. I'm going to go over some top 5 deadly trading mistakes that you should avoid, and I'm going to go over my personal experiences with these mistakes. So let's go ahead and get into it. The first mistake, and probably the biggest mistake I see traders have, is not having a trading plan. There's a saying that goes, if you fail to plan, then you are planning to fail. You can't just sit there and wake up 5 minutes before the market opens and expect to sit there and have successful plays. You need to sit there and get up early, take your time, and plan out your trades. Know your risk versus reward before you get in. Know your potential entries and exits. Know your stop losses, your targets, the levels you're looking at. Be as in-depth with your plan as possible. You don't want to have any fear of missing out, which is FOMO. That's when you just see huge momentum on a stock because of news or just anything, and then you want to just sit there and hop in with everyone else, and then right when you get in, you end up buying at peak, and it just crashes right after that, and you're just stuck, and then you don't cut your losses, and you end up taking a huge loss on your account. You want to avoid that. You want to always calculate your losses so you can keep them under control. It takes time, and that's the point. 90% of it is planning, 10% of it is going to be execution. So I get up about 2 hours before the market opens. I sit there and plan each trade, do my charting. I go into as in-depth into it as I possibly can. You got to be a robot. So once you have your targets set, you know your stop losses. All you have to do is execute your plan, which is just as important as actually having your plan. This is going to lead us into our next topic, which is going to be overtrading. So you do not want to overtrade. I've fallen for this multiple times. I've been green on the day, like $800, $900, and instead of walking away, like I had even thought about it, like I'm up nicely for the day, I should just take it, walk away, call it a day, go mentally reset, take a break, and I would just eventually sit there at the desk, and I would just take a loss, then my emotions would start stepping in, and I would keep trading, and eventually, before I know it, I'm red on the day, and those to me are the worst days. So to avoid this, you need to follow your stop loss. That's like one of the most important parts of your trading plan. You need to have your loss planned. It sucks, but you got to just take that loss whenever it comes to in your plan. That is going to save you so much money. It's a planned loss. You know how much you're willing to lose, and after that, you just stick to your plan. Also, if you find your emotions and stuff coming in, or you get anxious, or you're just not executing like you should, feel free to take a step away. Like, go eat some food, go sit outside, go do whatever you got to do to get away and to reset. Taking advantage of the open and power hours is how you're going to get the meat of the moves and get the most out of your trading day. Also, another thing to help you stop yourself from overtrading is to have a daily profit target or a daily stop loss for the day. So when I started, basically I said if I was up $200 or $300, I was just gonna call it a day. So like right when I got to $300 profit, that was like 10% of my position size that I was trading with that day. And then I would just call it a day, walk away, and keep my $300 profit. In my head, I do that 4 or 5 times a week. That adds up. That becomes $1,200, $1,500 a week, and that's, 3 to 6K a month. It adds up. So your small gains add up. Same thing with the stop loss on the day. Let's say I'm down $500. Am I really going to keep trading that day? Like, my emotions are definitely stepping in. I'm going to sit there and take a trade and then amplify my losses. I've been down like $1,700 before and then walked away, came back, and instead of just staying out of the market, I put my money back in, was super emotional, ended up doubling my losses that day. A tip I've heard from some of our interns in the chat is to just step away after 2 red trades. If you have 2 red trades back to back, just step away, and that all comes down to being able to identify when you feel stress and emotion. Normally, the second you feel stress or emotion, you want to walk away so you can avoid overtrading and messing up your profit for the day. There will always be another trade. The market's going to be open tomorrow. You're going to be able to capitalize on a play if you're patient. It's all about patience and discipline. Being able to identify with yourself and your emotions is key to being able to preserve your capital. This brings us into our third topic, which is going to be not paper trading enough. I see this a lot. I did this personally. I paper traded for maybe 2 or 3 days. And I've seen this with one of my friends, and they didn't paper trade enough, and they basically executed a trade and didn't know how to sell and got stuck into the trade and ended up taking a bigger loss. So you got to think you can sit there and paper trade with zero risk, with fake money. You can learn price action. You can learn how to execute on the platform. You can learn all of that with fake money, and you should. You want to be very fluent and fast on the platform before you start using your real money. Also, you have to be disciplined with your paper trading account. So let's say you're starting with a $5,000 account. You want to make sure your paper trading account is at $5,000 as well. And normally you can just message your broker, or you can edit your paper trading amount, but you do not want to sit there and paper trade with $1 million account or $100,000 account. You want to paper trade with what you would actually trade with, so you can be disciplined and learn what it feels like to be trading with that amount. This will allow you to learn the platform and to learn the price action and patterns, and just overall understand what trading is like during the day. Okay? Our next biggest mistake, and this is one of my favorites, and this is honestly where I took my trading to the next level, and that was because of not journaling. If your emotions are in control, you need to step away from the charts. I can't stress that enough. You need to journal everything. I journal my trades, my plan for each trade that day, what I did right or wrong that day for each trade. I'll literally write a huge paragraph in depth of all my trades, of what I did right or wrong. If they were dumb trades, bad trades, smart trades, if they were good trades, what I could have did better. Anything you can think of, where the S&P 500 and NASDAQ was while I was in my trade, just anything you can think of while you're in that trade, jot it down. Did you stick to your plan? Did I stick to my stop loss? These are all things you need to jot down and understand if you're doing it right. Were my emotions there when I got in the trade? Developing this habit of journaling and writing down everything you can possibly think of is key to becoming a better trader. And I recommend doing it with pen and paper. It just helps me memorize what I put down, and it's something I do every day, and I try to implement in all parts of my life as well. My next mistake is, this is probably one of the biggest ones I've struggled with personally, is thinking it's a race. You got to understand, trading is not a get-rich-quick scheme. It's not a race to get rich. You're not just going to be instantly making thousands of dollars right when you start trading, even though you see these gurus doing it. You have to understand, you have to put in the work. That is where people mess up. You have to sit there and put in the work and try your hardest and do everything you can to learn trading. You need to be watching videos. You need to be attending the lessons in the chat. You need to do anything you possibly can to learn how to trade. You need to focus on the knowledge, the consistency, and the execution. Do not focus on the money goals. If you focus on the money goals, you're never going to be profitable. You got to focus on learning the price action and your execution. Think about like a doctor. A doctor goes to school for a long time to be able to make that kind of money, and in this career, you have to think, you have to sit there and put in the time and learn it. You got to size up shortly. So for me, I would stick with one position size. It was like 3,000 to 4,000. I stuck with that for 6-7 months until I got comfortable, and then I would slowly scale up. And then you can understand how your losses are going to feel with, like, certain percentage losses are going to feel with that account or position size, and you can know how to feel emotionally and make sure you're comfortable while you're in the trade. You want to build that cushion and get comfortable with where you're at first before you start sizing up. There's really no reason to size up. Like, yeah, you can make more money, but you need to know the execution so you can actually execute with that larger size before you try to go in heavier. Because when you see the bigger numbers, your emotions are going to take full control of you and get you out of that trade and make you have a loss. Also, another thing is know your high probability trades. Don't sit there and play with your full size on every trade. Only do your full size on trades that you have planned, that you have multiple reasons of getting in. They're super high probability. You know exactly how you plan to execute it. Make sure you do those with your full size. If it's just an intraday scalp of like a high or something, size down, play it safe. Know the probabilities and know your risk management. Knowing when to size down is a huge part of preserving capital, and knowing when to walk away. So I hope these 5 steps helped everyone. If you have any questions, feel free to type them in the comments. And thank you guys so much, and enjoy your weekend. Thank you guys.